Hello, everybody. We're going to start in just a minute or two here. Hello, everybody. Welcome to NYISO Spring Outlook 2016. We're going to start right now. But before I start, if you have any questions as we go along the presentation, please feel free to type it in the bottom of the slide. You should see a Q&A or question box, and we will respond either as we go or at the end of the presentation. So presenters today, myself, Arman. I'm here with Ben and Devin. Ben is also an analyst for New York, and Devin is our meteorologist. Our agenda today, we're going to take a look at the winter that we just completed. Then we're going to look at demand of last spring, what to expect this spring in terms of demand and power, basically generation and line outages, gas, tie lines, everything that has to make up the power market. So we're going to start with a winter look back. I will hand it over to Ben.
All right, hey guys, Ben Chamberlain here. We're going to go really quickly through the winter look back. Got a good amount of time of material to cover, so we're going to jump through pretty quick, but if you have any questions, feel free to type it in the box and we'll address it at the end. First things first is if you were on about 3 months ago for our winter outlook, you'll recognize at least the chart on the right. This was basically the calls that we made last year for the winter. We did all right for the winter, but I think there were a few things that surprised us. The first thing is that we definitely predicted bearish load across all zones. That's due mostly to the warm weather. We were good on that. We had predicted a bullish zone A due to congestion. Dunkirk had retired. When was that? January 1st. Right. And now Huntley has retired. But we didn't see that congestion until just recently. So Zone A ended up being quite a bit more bearish than we thought. We had anticipated higher Canadian imports, less exports to ISO New England. That was realized. We were neutral to slightly lower on gas prices, and that was probably the understatement of the year. But so we were off on that. But we also had narrower AG spreads, less Central East congestion in the forecast, and we did see that. And jumping in, we did see very low prices. So this is the day-ahead on-peak average clear price, Zone A and G here for the last 4 years. You can see that 2015, by far this winter, is the lowest by a huge margin. Cheap gas prices caused cheap power prices. Warm weather was low demand. Essentially, all of the principal drivers were very bearish, and we saw Zone A average for the entire winter at $24, which is incredibly low. Certainly a far cry from 2013 with polar vortex weather, which pushed the average Zone G price up at 140. So very cheap this winter. Here's a quick chart of day-over-day on-peak average clears for Zone A and G. The line in red is the most recent winter, and the other 3 lines are the last 3. So as you can see, we're basically, for every day this winter, we were down at the bottom of the historical average. The clears this year didn't show the weather and gas-driven price spikes that we'd seen in the last few years. Polar vortex definitely hit hard. I believe that was January 2014, and that shows some of the most extreme price spikes in the past, and we had nothing even close to that. You know, G was lucky to break 50 on a few days. That Valentine's weekend cold weather was, I think, one of the only times. Highest clears we saw in Zone A was $30, and G was just about $62. And those were both on the 13th, just that day before Valentine's Day. Gas prices. So again, these were essentially the principal driver of low power prices across the board, far below average. We had a very strong gas supply and very mild weather, a lot less gas being used for heating demand. So that caused the lowest gas prices that we've seen in recent memory. And you can see here by just the averages through the winter, this was a fraction of what we were paying for gas in the last few years. Certainly quite a bit lower than we saw in 2013. And the spread between the Zone G, or sorry, the Z6 and AGT gas was also a lot lower than typical. We had an average of spread of only 89 cents. That's one of the reasons that we had a lot less transfer headed towards New England during the winter. All right, this is a chart of the last 3 years demand from max to min, and then the black line here is the demand that we actually saw during this winter. Certainly a lot lower. We see on average for all 3 months we were below what we typically see in the last 3 years. We saw our peak on-peak average load Monday on the 15th of February, and we saw the peak hourly load in January, but overall mild weather caused low demand for power. One thing that's interesting to note is Huntley, the coal unit over in Zone A that has just retired, essentially ran nonstop from right around January 1st all the way through the end of February. This was one of the large things that suppressed Zone A congestion up until now, and this is one of the biggest changes that we're going to look at going into spring. You can see here that those blue bars are the days in which Huntley ran, and the green line there is the average congestion cost per on-peak average period for Zone A. So you can see that essentially from January out, that congestion cost was very minimal, largely due to Huntley running, relieving congestion there. That did push the Zone A price lower than expected. And that photo there is one that we took here at Genscape. We took a look at Huntley's coal pile to try to identify how long they'd be running. Based on some of that surveillance, we had figured that Huntley was likely to run up until the retirement date. So we, as soon as they had jumped on in January, we were pretty sure that they'd run all the way through the end of the year there, or sorry, up until March. All right, quick look at imports. Here is the day-ahead cleared imports for Canadian sources. HQ imports were slightly above seasonal, not a whole lot there. Cold snaps typically curtail Quebec imports, and we didn't have a whole lot of those. So 52 megawatts above the 3-year average. Ontario imports were significantly higher. Huntley running helped with that. It prevented a lot of downside congestion that Ontario imports would normally get. Warm weather, low Ontario demand helped with that as well. Looking on the U.S. side, we have PJM imports. These were the biggest change over the winter, far below average. In general, the glut of cheap gas caused PJM's more coal-based supply stack to simply be less competitive with New York's. Our prices were a lot lower, and they found a lot less economic incentive to export through to New York. New England, same thing. Imports were a little bit. We had fewer exports to New England, and that was primarily driven by gas as well. All right. And now we are going to jump to our demand outlook, and I'm going to hand it over to Devin.
So I'm just going to take a minute to recap the winter weather just briefly. This winter played out much warmer than normal across the Northeast. As Ben mentioned, that drove very bearish demand. We started off with very strong warm anomalies, with December actually verifying as the warmest on record for New York, nearly 15 degrees above normal. So that definitely drove bearish demand in December. Temperatures moderated towards seasonal norms through January and February, but remained warmer than normal with continued bearish demand through the end of winter. The overall winter peak fell on January 19th at just over 23 gigawatts, which was actually almost a gig and a half weaker than the winter peak last year. So to give us a little bit of context for the spring outlook for weather and demand, I'll just do a brief recap of spring 2015. Average temperatures for last spring verified mostly in line with seasonal normals. We did see an average of some weak cool anomalies. The spring started off with moderate cold anomalies, actually averaging 5 degrees colder than normal for March. So this drove moderately strong heating load early in the season. However, mid-season, a significant pattern shift sort of took place, warming to an average of 6.5 degrees warmer than normal for the second warmest May on record for New York. So looking forward to spring this year, we expect to see warmer temperatures year over year overall, which will encourage some weaker demand early in the season in particular. So our main climate driver for the spring 2016 forecast is the continuation of a strong El Niño pattern. El Niño is expected to weaken through the season, but we expect it to remain in the strong classification through the spring, through May. So generally this pattern indicates that we can expect warm and dry anomalies across the northern tier of the United States, with cool and wet anomalies mostly confined to the south and southwest. So for New York, that suggests a general warm pattern, general dry pattern with stronger warm anomalies in the west early in the season and weaker anomalies on the coast. So we'll just take a brief look at the monthly breakdown for spring. We expect a pretty strong north to south gradient in temperatures early in the season. So much above normal temperatures will be mostly sticking to the north and west in March, with more seasonal temperatures on the coast. Then moving forward into April and May, we expect to see slightly weaker anomalies, but they will extend out to the coast. So this suggests a bearish start to the season and then a bullish finish as cooling load begins to develop into May. And then in terms of precipitation, we do expect drier than normal conditions to offer a pretty mild start to spring. This would drive bearish lighting load for March as we see less cloud cover in general. And then precipitation will trend toward normal mid-season, and in May, potentially tipping to just above normal, mostly on the coastal and eastern half of the state. So that could potentially drive some slight bullish lighting load. So I'll hand it over to Army to look at the spring power outlook.
Okay, thank you, Devin. So let's start with generation. This is only one slide about retirement additions and outages. Other than Huntley that retired yesterday, we don't have to worry about any major retirements this season. In terms of additions, we have about 80 megawatts generation being added in Zone A and E. In Zone A, that area power is actually is in a good location, in a location that would avoid Zone A congestion. But the fact that it's only 79.4 megawatts, it's not going to solve the entire problem, but it does present a downside congestion in Zone A. And in June of 2016, National Grid has a project that would basically work on reactors and capacitors. They're hoping that they will help avoid Zone A congestion as well. As far as planned outages, we're expecting Indian Point 2 to be on maintenance from March 6th to pretty much the end of March. Other than that, we don't really have much to talk about at this point. However, if you look at the last 3 years of generation outages in terms of megawatts, you see in March there's a certain number. In April, planned outages go up. Then in May it goes down as the state tries to get ready for the summertime. We have the numbers for the March of 2016 updated by NYISO, and you can see it's less than 6,000 megawatts, which is less than the last 3 years. I'm expecting that number to go up. I think it will be updated by NYISO, and it will go up to about maybe 8,000 megawatt levels as time goes on. And just to fill in some people who may not be aware about what was happening with Huntley, I'm not going to spend so much time on the slide. Basically, in August, NRG requested that Huntley needs to retire because it's not economically feasible anymore. And then in October 30th, NYISO accepted it with a couple of conditions that had to be met. There were a lot of line maintenance done in December of last year, and basically NYISO said it's not going to present a reliability problem, and they had accepted Huntley's retirement. But as soon as they retired, we can see those are just the 3 days after they retired. This is actually including the 29th of February, which Huntley was running. This is just a couple days ago, but you can see the peak hours on the second half of the day were a lot higher than the red line here is on G. And we have a monitor on Huntley, so we know they stopped running about 7 p.m. on the 29th. It was their last day, and that immediately impacted day-ahead prices. Then on the 1st of March, we saw the same effect in the morning as well. The 2nd of March, not a single hour in Zone A was under Zone G, and we don't have the third price in the slide, but it was $55. It's the highest Zone A clear year to date. So basically, is NYISO complete without Huntley? Well, is Zone A complete without Huntley? It doesn't look like it, and it looks like those expensive Zone A prices are going to remain. So what are we going to worry about when we look at Zone A? Any line outages that has the name Niagara, that will drive Zone A congestion. PJM imports have always played a big role in Zone A, but now that Huntley and Dunkirk are out, PJM imports that go into Zone A become a lot more important. South Ripley to Dunkirk line, we're going to look at that line outage as well. It's important to note which way the flow is, the power is flowing. It could be from Zone A into PJM, and if that's happening, and then the line is scheduled to be out, that lowers congestion. And if it's the other way around, then it will make it go up. Ontario imports, if they're higher, Zone A congestion is going to go up, and obviously if demand is stronger, goes without saying, it will bring congestion up. But overall, the 230 kilovolt supply and the weak 230 and strong 345 kV, that's the recipe for Zone A congestion, to say the least. So a couple of scenarios here. So basically, as I said in the last slide, Niagara to Packard line, for example, that will drive Zone A congestion. Strong wind generation will also drive, in both day-ahead and real-time markets, congestion. It's just because those wind farms that were not designed to flow their power towards Buffalo. It was supposed to go towards New York City, and that's just not happening anymore due to lack of generation. In the day ahead, we see Gardenville to Stoll Road, and in the real time, Mayor to Weathersfield line being congested. You should look at Homer City to Stoll Road, Niagara, Gardenville, those line outages. They're red flags. If you're expecting strong wind generation and those lines are on outage, again, that's recipe for wind-driven congestion in Zone A. Also, Central East congestion is one of the biggest interfaces in New York. It stands downside to Zone A. It does separate Zone A from eastern zones. It can be very wide. The shift factor on Central East is low, but the impact on Zone A is very high. It has to do with the way shift factors are calculated. If you just look at the shift factor, you're going to think Central East does not impact Zone A very much, but it will create very wide spreads. So thunderstorm alert, I just want to dedicate one slide to it. It's not a very big deal in the springtime. It's a lot more important in June and July. Basically, last spring there was one thunderstorm alert in March, none in April, and 4 in May. And asking our meteorologists, they're expecting more storms this year. They're in favor of it. Basically, what will happen whenever there are thunderstorms in Hudson Valley area, if you look at the right top of the picture, you see Leeds and Athens. So basically, from Leeds down to Pleasant Valley, that line is going to be congested by NYISO due to reliability purposes whenever there's a thunderstorm alert or expectation. And when that happens, there's a price separation. Zone G and J will receive upside. This is the first springtime that we have 2 new generators in that region. Luckily, they're in the southern part of that congestion, meaning they will lower that congestion. It's not going to be as strong anymore. The price separation shouldn't be as strong anymore. Those are bowl line and dance camera, also highlighted. And that brings me to line outages. I should have mentioned also, if we're expecting a thunderstorm day and there's a line outage on any of those lines in Hudson Valley, it just means that thunderstorm-driven congestion is going to be a lot stronger. Now, looking at other line outages, there are so many, there are literally hundreds of them. We handpicked a couple of them, put them in a graph, a table for the next 3 months. You see there's Niagara Packard 115 kilovolt out until all the way out the end of May. I think NRG is planning on having this line back in service before June. This line has been extended back in time. It is possible that it will be extended. And it is an upside risk. You can see South Jopley to Dunkirk is out until mid-March, March 15th. But after that, just because it's not showing up here, it doesn't mean that it's not going to be on outage. NYISO tends to update their outages quite often, so something to keep an eye out for every day. And you also see Sawyer and, again, different lines with the name Niagara in it, so you know they will drive congestion. And in the bottom of the top table, Homer City to 5 Mile line outage. So 5 Mile is a new node in New York, and basically it's a part of that big line that flows from PJM into New York, Homer City to Stoll Road. So if that line is on outage, we have to worry about PJM imports coming into New York being less or zero even, and that's definitely an upside zone A congestion. And you can see it's out from mid-May until about mid-April, I should say, until mid-May. Then if we look at Zone G, J area outages, other than Central East, there's a handful of line outages. It doesn't look like there's a lot in here, but as I said, that doesn't mean there won't be any more scheduled later on. Leeds to Pleasant Valley is a big one to worry about, especially if demand is high, more so in May. And because we're expecting warmer temperatures, it could be downside in March, but in May it actually means upside demand, because now we're talking about summer-ish time and actually cooling demand driven prices.
All right, Ben here again. I'm going to take back over and look real quick at internal interface outages and derates. As we mentioned, Central East, which is right between Zone E and Zone F, is one of the largest drivers of congestion, especially in the spring when there's a lot of line maintenance that impacts it. The Central East transfer limit is normally listed near, I believe, 2,900 megawatts, 2.9 thousand. And we are looking at a lot of consistent derates essentially through the entire spring. The largest that is more than 1 day is Edict to New Scotland, 345 kV line outage from March 7th to 27th. That's a derate of 735 megawatts on Central East. That is likely to cause congestion on most days where we've got fairly significant load, or if there's any generation outages on the GJK side of things. I know Indian Point is likely to go down for maintenance over in March, so we do expect a considerable amount of congestion in Central East at that time. Dissinger East is another one we're worried about. That is a lot closer to Zone A, between Zone A and B. And we're looking at a few isolated derates there, but those will generally cause a little bit of congestion. We could see downside to Zone A because of any Dissinger East derates. On the right, you can see the average monthly derates. That's simply the average of every day in the month. You can see that Central East derates are starting to ease off as we get into the spring. Right until the end of May, though, we do have fairly significant Central East derates. Dissinger East is accelerating in May.
And it probably helps to say that without Huntley, less flows are going over Dissinger East. So if you want to compare it side by side, looking at historic days when there was the same amount of megawatt being derated, it may have driven more congestion if Huntley was running at the time.
That's true. All right, quick look at gas. We are still heading into a warm spring, so gas prices are expected to be fairly low, lower than average certainly. You can see the 4-year averages on the right. Usually around this time, we're averaging up to the high single digits to low double digits for gas price, and we're simply not there this year. Gas prices are coming in below our average right now, and we would expect them to essentially remain below average for the rest of the spring. If you look at the 2012 gas prices, you could consider that to be essentially the highest that we'd look for gas prices this spring, but we're probably looking at near $2. Now, quick look at imports for each one. We have, for Quebec imports here, chart on the left is a little different. This is the last 4-year average and the range that we've seen over the last 4 years. In general, HQ cleared imports are fairly high except for outages. We only see 2 outages on the HQ line that we really expect to actually cause any issues. One is from March 5th to March 6th, and then another one from April 23rd to April 24th. So overall, not a lot of interruptions on the HQ line. Warm weather, bearish northern demand, also likely to result in an excess of capacity in Quebec, so we could see a little extra, maybe moderately above average coming in this spring than we typically see. Looking at Ontario, we usually see fairly strong imports from Ontario as well, average of 888 megawatts in the spring. We've got warm weather again in Ontario as well, so we could see excess capacity there. There's very little that's impacting the transfer capacity in Ontario. Very few outages that would affect that, but they could get downside from Zone A congestion. It'll be variable day to day. I think that Ontario imports are likely to react to Zone A congestion fairly well. It would be pretty easy for them to get significant downside pricing if Ontario imports come in too strong for a day. So it's likely to be variable. But on the whole, based on excess capacity in Ontario and low demand, Ontario typically has a good amount of baseload capacity to offload, and a lot of that should be coming to New York either way. So slightly stronger possible, but it will be very variable day over day this year. Looking at PJM imports, we can see that typically in the winter, PJM imports are high and sort of ramp down closer to even as time goes on. We are far below what our average would be for PJM imports over the winter. Again, likely mostly due to cheap gas. So we would expect these to be significantly weaker than what we'd see in most springs. We should see that getting closer to normal as temperatures warm. I think that in the summer we're looking at something that's a little bit more seasonal for PJM imports, but we're below that for now, for the next month and a half at least. As far as outages go, the AC lines aren't seeing a huge amount of derates, but we should see We are seeing right now the Hudson Transmission Project line into Zone J is on a forced outage from right after the New Year all the way through to right now. That's the 1st of May. That is a forced outage, so we could see that be pushed back, but that's a lengthy outage on the HTP line. Neptune line is out from the 2nd of May to the 6th. And we have a few outage on the VFT line. In general, not likely to have a huge impact just due to low demand, but it is something to watch out for. And finally, we have our New England imports. What we typically see there is strong exports to New England going back up towards neutral. We would expect that the low gas spreads would result in fewer exports to New England this winter, so closer to balanced in the spring, and similar to PJM, should be getting closer to our seasonal average as time goes on. So moderately weaker there. We are looking at some cross-sound cable maintenance on the 5.9 to 5.14, and we have a derate on the AC lines due to a Berkshire to Northfield 345 kV line outage, and that is at the end of April here. Now I'm going to hand it back over to Armand to do our recap here.
Thank you. Okay, so for March, as mentioned multiple times, much above average temperatures. So we are expecting low prices because of low demand, and also ISO New England is also expected to be very cheap. So we should cut exports from New York into New England in March as well. As we mentioned, Indian Point 2 is going to be on maintenance outage. However, the upside that NYISO is going to get from that is very limited, again, because of low demand and low gas. Then in April, we have historically experienced higher generation outages, higher line outages, so that should happen, but again, bearish gas and demand are likely going to continue to keep prices lower. But more upside to Zone A because of local line outages and less central east congestion in April. Then in May, it becomes more like a summer-like month because of cooling demand-driven congestion. But HTP flows are going to resume. Central east should be lower, but Zone A should continue to bind. And putting everything in just one picture here, in terms of demand, we're very bearish. Generation, other than Huntley, we don't have too much to worry about. Congestion overall should be bullish. Gas is bearish this spring. And again, imports should be bearish mostly because of our expectation of less exports going out to ISO New England. We only have two market news that we wanted to share with you. These are not going to impact. Just waiting for the slide to update here. Yeah, it looks like it's taking its time.
Hang on, technical difficulties briefly.
Just 1 second, please. We are refreshing the web page, so hopefully it will be restored in a couple of seconds here. Okay, looks like we're back online. Sorry about that inconvenience. So basically, our news, one of them is that there's a new rule in New York now that's going to impact only the power marketers and retailers. So basically, now they're required to provide guaranteed cost savings. So that competition that they have with utility has just became a lot harder. And if they incur costs, then they have to buy at least 30% of their supply from renewable energy sources, which is going to be more expensive. And the other news is that, again, this was a proposal made by the New York Governor, Andrew Cuomo, in January 13th. He proposed that New York is going to be, or he wants New York to be coal-free by 2020. This is not a hard deadline. He just doesn't like coal. At this point, Huntley has already retired, so it's only impacting Somerset and Cayuga. Those are both very big generators. And not sure what would happen by come 2020. We will see, but it is likely that they will be converted to natural gas. With these low natural gas prices, coal is not as profitable as we've seen with Huntley situation. And finally, there's an energy forum, April 21st and 22nd, where we're going to talk about oil, power, and gas. So if you're interested, please, you can click on the link after you get the slides, or I'm sure we will send you more detailed information with the slides. So be on the lookout for that as well. If you have any questions, we're going to be here for a couple more minutes trying to answer your questions. So yeah, any questions, please let us know right now. Okay, one question, line work, the likelihood of line work being done on time by June 1st, and is that really going to relieve congestion? I assume the question is about Zone A. I'm not sure if it will be done on time, but I think more importantly, I don't think it will actually relieve Zone A congestion, whether it is done on time or not. So come June 1st, I'm looking for that Zone A congestion.
We had another question as well about real-time prices, how they will be compared to day-ahead. In general, I think with cheap gas, and we've got a pretty solid supply stack coming in, we should see real-time be cheap, and generally I would say cheaper than day-ahead on average. Zone A is the possible exception, and that's going to be a bit of a mess. Congestion's incredibly volatile in both the real-time and day-ahead, but there's a lot of real-time upside risk in Zone A from congestion. In a lot of other places, again, I think our low demand and low gas prices typically make real-time bids very low. So the risk for upside on real-time is certainly a little bit less than many years, but Zone A is still something to watch out for.
Another question is, can we provide any color opinions on National Grid Western New York line maintenance? So it is scheduled to be done through all the way until, I believe, 2019 June is the last one that NRG has to complete the project. However, they have done quite a bit in December. Niagara Packard line outage, I believe that was the main one that they wanted to provide some work on. Unfortunately, I'm not exactly 100% sure what was the main work that's being done on the line, but it didn't really do much because, as we can see since 2 days ago, without Huntley, Zone A prices are being very expensive. That congestion is definitely there. So the line work that was done in December didn't do much, and now we're just looking forward to see what will happen with this June deadline. We'll see what happens with that. And also there is another question about if not June or next June, when do we expect Zone A congestion to go down? Again, not really sure about that one either, but I would say until December of 2018 December, when Dunkirk is supposed to be refired as a natural gas power plant. I think that will be a big milestone. Once Dunkirk is back with 440 megawatts natural gas, I think that's when we can expect less zone A congestion. But other line work, I don't think that will do as much. Okay, we don't see any more questions coming. Thank you very much to everybody for your time today. Please be on the lookout. You will receive the slides and the recording. And always, anytime you have any questions, feel free to get in touch with us. Bye-bye.